In this week's update, Magnificent 7 dominoes are teetering, but context is vital. And gold in a huge breakout and follow through. My name's Garry Davis. As always, this is general advice only. And please remember to like and subscribe to the video. Now look, Friday in the US has caused some consternation in some parts about a significant amount of profit taking in the semiconductor sector. So I primarily want to examine that because some people are using that as evidence that we could be at a major top in the market. I don't believe that's the case, and I'll give you the details on why. So as always, context is critical when you look at charts. You can't just zero in on a single chart and expect to get a correct answer if you're shutting out all the other available information. So I'm going to be giving you that other available information this morning. Now, the reality is that NVIDIA, which has powered the semiconductor sector, is up 700% since the October 2022 lows. So that's an extraordinary advance, and it's very easy to assume that it's got to be overdone. It's run far, too fast, and it's all got to come crumbling down. But let's have a look at the valuation. The valuation is actually lower now than it was in October of 2022, which seems incredible after a 700% advance. But it's just the earnings and the cash flows are rising so quickly that the forward PE is only 32 times. And for the growth on offer with NVIDIA, you've almost got to say it's cheap. I mean, I know that sounds ludicrous, but you've almost got to say that that's cheap for the sort of growth that they're experiencing and the outlook that they've got. And it's less than, in fact, significantly less than the forward PE for either Microsoft or Tesla, which are significantly higher. So, there's the first point of context. And the free cash flows, as I said, are just enormous. They're just making a staggering amount of money. And if you look at Meta, which is a stock that's hardly been a favourite of mine for the last couple of years, it's trading on a forward PE of 24. So I think there is certainly a lot of misconception in the market about the valuation of these stocks. There's been assumptions made that these stocks are incredibly expensive and therefore have got to fall over, and we've got to get some big correction just because. Well, just because the price has gone up a lot is not adequate justification. So we've got a Meta on a forward PE of 24. We've got NVIDIA on a forward PE of 32. Not expensive. No reason for them to put in a major top. None whatsoever. There certainly were some sharp reversals, and I'm going to show you some of those. So I'm not saying there's just no substance to this at all, because there's some examples of significant reversals. But equally, there's plenty of abundant information to the contrary as well. The rises that we've seen since last October 2023 means that some profit taking was inevitable, because that's just how the human psychology works. There's got to be a point where there's a breather and some early birds start to take profit. That causes a bit of a reversal. Friday may have been the start of it, but maybe not. I'm not really forming much of a strong opinion on that. And others follow, and stop losses get triggered, and all that sort of very short-term dynamic plays out. But what does it really mean? Does it mean there's going to be follow-through, that this is a significant top? And the answer is we don't know yet. We need more data is the bottom line. So my overwhelming and emphatic message in this video this morning is to just stay cool. Let's see what the follow-through looks like in America and Australia. Maybe put some tighter stop losses in there, whatever's appropriate for you. But, don't panic and don't get drawn into the media hype that will be inevitable if we do get a couple more days of selling. And there are plenty of stocks that have held up quite well. So let's go and look at the charts and see what the charts are actually telling us. So this is NVIDIA, fabulous run. And on Friday, the market gapped higher, then traded up. So it gapped up to this point, then traded up, and then gave it all back, completely engulfed this candle, and the volume was significantly elevated. So that's ugly, and that qualifies on its own as a significant reversal candle for my money. There's no question about that. But again, the context is important, because if there is next to little follow through, then it could just be, another example, perhaps like what we got back over here. So let's look at SMH. So this is the overall semiconductor sector. Again, looks very similar to NVIDIA, and there's no surprise there because NVIDIA forms something like 25% of this particular ETF. So that's a dead set significant reversal candle. But will it be followed by further large-scale selling? I don't know. Looks nasty. The sector was ripe for profit-taking, and let's have a look at some more charts to get a better feel for that. So there's Taiwan Semiconductors, again, another major contributor to SMH. That also doesn't look great, not quite as bad as the first two because it didn't completely engulf the previous day's candle. But we got a gap up, we traded higher, and then we gave it all back, and the volumes are elevated. So these are all candles where you would have to expect there to be some follow-through selling in those particular entities. So I'm not saying there's not going to be any, but is the selling, does it warrant you changing anything in your portfolio? And at this point in time, I emphatically say no, it does not. Let's look at Meta. So this is a weekly chart of Meta. So let's have a look at what happened on Friday. And you can see for the week, no particular significant volume. And that was Friday. Now, that doesn't look terribly scary to me. Volume's not elevated, not a particularly nasty candle. So it could well be that there is just a couple of stocks that, for whatever reason, incurred the selling wrath of the market. This is SMCI, which is a stock that's gone from $300 at the start of the year to $1,200. It's gone up 400%. It was already a big stock and on massive volume. Let's have a look at what happened on Friday. Now, that's not terribly dramatic either. Volumes up slightly, but not really. And that's not nearly as a dramatic candle. And yet that is very much in the same sector as NVIDIA and Meta and many others. So a particular drama there. Let's look at ASML. It's a weekly chart. It's had a fantastic run. Let's have a look at what Friday actually looks like. It's sort of in the middle. It's a negative candle, but no elevated volume. So nothing particularly dramatic there. This is a chart that I've shown once or twice in Sunday videos, not for any particular reason other than it's an incredible trend. This is a daily chart, but look at the trend. Almost no pause and consolidation, virtually no pullback whatsoever, it just went up in a straight line. Now look at the last 3 days. Yes, volume off the peak. Volume's elevated, but I'd sort of classify that as of mid-concern. It's not great, and we'll probably get some consolidation, but it's not terribly nasty either. But then we can move to other parts of the market. Look at ExxonMobil in the energy sector. What a great finish on Friday. While all this was going on, we had stocks that were doing this. So I fail to see that we've got a widespread sentiment change. Or this, one of the biggest health stocks in the world, Cardinal Health, went up and closed almost on its highs. So I'm just not seeing the widespread negativity in the market that would indicate a major top. A short-term top, I have no problem with whatsoever. But do you want to be making radical changes to your portfolio because of a short-term top? that's way overdue? I don't think so. So that's how things were setting up in the US. Now the S&P was ended up down 0.3% across the week. We saw technology and discretionary fall over, but the earlier part of the week sort of sustained things. The broader picture, I've just really gone through that now, but we'll look at those particular indices and where the money flows are going as well. That's important. US dollar index virtually unchanged, and the yield the yield was actually lower. So it's not like those reversals in NVIDIA and SMH were because the yield was going up and the market's getting worried about that as it did back in the end of 2022. The VIX was up a little bit, but again, not terribly dramatic, only to 14.7. And on a broad scale, that's relatively low. So let's jump in and take a look at the key charts. So first of all, I'll look at the S&P. So there's the S&P for the week. So you can see we opened pretty much where the market had closed the previous Friday, traded up, traded down. But if we put that on daily, you can see there's nothing terribly dramatic there at all on the S&P. If let's look at the small caps, let's look at the Russell. Nothing nasty about that candle in the Russell either. Nasdaq versus the S&P came off slightly, but not by much. There wasn't a great discrepancy between those two indices on Friday. That's SMH, which I've already covered. Semiconductor sector relative to the S&P, yes, of course, that turned around and came back a bit, but look where it's come from. All markets and all stocks are entitled to a little burst of profit taking every now and again. There's no need to panic. Over the last week, energy was the best performing sector for what it's worth. Consumer staples, materials, communication services, an aggressive sector of the market, near the top. Banks did well, as they are in Australia. Healthcare, sort of middle of the road. And at the bottom, we've got technology and consumer discretionary. So yeah, they did cop a little bit of hammer towards the end of the week, but let's look over the last month for argument's sake. And things that, there's nothing dramatic there in those money flows that causes me undue concern about the US market. Let's look at Australia over the last fortnight while I'm here. Unquestionably, information technology did well, so it'll be very interesting to see how infotech as a sector does on Monday. I think I'm looking forward to that quite considerably. Banks have also done well, so we've moved up quite strongly in the banking sector. This is US large cap growth versus large cap value. Again, nothing terribly dramatic there. So I'm making the same point over and over again, but doing it with plenty of charts that give you both sides of the story, not just seizing on a single chart and using that as your total barometer for where the market's going. The Aussie dollar jumped up a little bit, 65.5. Our index gained 1.3% across the week. As I said, it was strong for IT and banks, but what we see here on Monday will be very, very telling. Let's just go and have a quick look at the Aussie charts. ASX 200. Strong week, closed on its highs. I suspect we'll see profit taking on Monday. There's materials for the week, not a lot of change, and materials has sort of lost momentum, really. The banks did really well. They were probably the best performing sector last week, but IT wasn't too far behind either. That's a daily charge, just put it on a weekly. So IT's been having a great run. All right, now while I'm here, let's look at gold in US dollars. finished again on Friday, finished well, closed off its highs, but we managed to get up to almost 2,200. So this breakout now is really on in earnest. If we look at that on a weekly chart, you can see quite definitively gold has broken to new all-time highs. If we look at it in Aussie dollars, we finished. In fact, we went over 3,300 during Friday. Just finished a little bit underneath it. But that is very strong. However, when we go to, let's go to GDX, this is the Australian version of the GDX ETF. We've had some gaps naturally with the gold price doing what it's doing, but gold stocks really they're not responding in the way that I would have thought. And this is a long-term spread, which I haven't shown for quite a few months, but I've been showing for several years now. And this is the ratio between the US ETF GDX, so these are the world's biggest gold stocks, and the US dollar gold price as an ETF. And what this means is that the gold price is gaining quicker than gold stocks, or gold stocks are losing ground. And for several years now, gold stocks have been drastically undervalued compared to the gold price, and it's still happening, and it's getting even more stretched to the downside. So that's why last week I said something's got to give, and it certainly didn't turn around in the week that we've just had. I just don't know how much more justification is required for gold stocks to start to play some catch up. Okay, so let's just reconfirm that. So gold was up $96 to $21.79, which is, of course, the highest ever closing price. And in Aussie dollars, we did tip over the top of 3,300. But the stocks, they're still not reflecting the move. We've got a few local gold stocks that are doing quite well, but they're few and far between. I'm talking the developers here. The producers have responded, but again, not as well as I would have thought. And only a few developers are responding. So there's just not the widespread enthusiasm that I would have thought would have occurred. Turning to other commodities, copper was virtually unchanged at 388. Nickel pushed up a little bit further to 793. Now, as with all commodities, the cure for low prices is low prices. The cure for high prices is exactly the same. Eventually the wheel turns. But in the case of nickel, if companies like BHP decide to walk away from their nickel assets, then a lot of corporate damage may have been done by then, so that those entities are not readily coming back. So it's a sector that the nickel sector is really shrouded in uncertainty at the moment. So I would just rather leave it alone rather than try to bottom fish, and that's the real casino play doing nickel stocks at the moment. It really is. Just leave it alone. There's so many other sectors of the market that are going fantastically well. You just don't need to be in a market that's plagued with the uncertainty that nickel is. Crude oil slipped a little bit. We're up close to 80 last week, back to 78. There's not a lot of change there. There's the spot copper chart, pretty much the same. Nickel continuing a bit of a recovery. But as with lithium, no confidence at all that it can be sustained at this stage. And the dynamics, the supply and demand dynamics around nickel are no different to lithium. There's the crude oil chart pushing up as well. All right, final thoughts to wrap it up. I'm not put off by what happened on Friday night. I remain a buyer of high quality stocks, highly qualified stocks, both in the US and in Australia. There are just literally hundreds and hundreds of terrific stocks or companies with great fundamentals, and even more importantly, fantastic trends. Now, some stocks and sectors are at short-term risk, absolutely. no argument with that. But when you've run up as hard as that, inevitably there will be some profit taking. But, just keep your head straight on this. 2024, as I've been saying for several months now, remains an environment for stocks that's just about as good as it gets. So against an environment that shapes up in that manner, why would you get a major top in the market? That doesn't make any sense either. And there is insufficient evidence to back it up. So if you're going to throw the baby out, if you're going to throw the bathwater out, then make sure that you're hanging onto the baby very tightly. As I said earlier, the follow-through on Monday morning in the Australian market will be very important. It'll be negative, I would expect. It's just how negative and how does it finish? That's the key for the Australian market. Our portfolio analyst last week was the once a month taking stock of things that we did in February, and also some outstanding opportunities as well. So that's it for this week. I'll be back with you next Sunday. More information on our website, and there's my email address. Cheers.